Hello from Trend Signal with our review of the data and events the week beginning the 9th of February. We start the week on Monday with tough start really for equities. That follows on from a fairly good performance last week, especially in the US. Um, Reasons for the tough start on Monday morning, mostly Greek issues from certainly from the Greek Prime Minister, who stated on Sunday that Greece would not seek an extension to the country's current bailout, which, according to the FT, is putting his left-wing government on a collision course with its creditors um, in the run-up to this week's EU summit. We've also had some fairly poor Chinese data, exports falling 3.3% in January from a year earlier, but imports, notable contraction there, 19.9% contraction from a year earlier. Um, so not good news as we start the week, but last week was all right, certainly for equities. The FTSE managed a 100-point gain, which is about 1.5%, similar to the DAX, which rallied about 135, 140 points, which is just a shade over 1.25%. But the real highlights of last week were in the US, where the S&P managed to rally 61 points, or 3%, closely followed by the Dow, which put on 408 points, or 2.35%. The other notable moves last week were in gold, which continued to fall as the metal fell $51, just short of 4%. Brent crude moved in the other direction as the fall in price has affected some plans for further prospecting and the shutting down of some wells. Brent crude, that rallied $4.90 or 9.2%. Some people speculatively calling a bottom to that price fall in crude, but I think it's very early days yet, and it's not surprising to see a bit of backing and filling in this market, which has really tumbled considerably since July, August last year. The main event of the week last week was undoubtedly the US employment or unemployment data. The US data had been missing consensus more recently, reflected, I guess, in a pullback in the US dollar, but the non-farm payroll was very positive. The US employers adding more jobs than expected, wages rebounding, which I think really has put us on course for an interest rate rise in the middle of the year in the US. I think it's almost a bit of a shoe-in, really. Previous month's data, that was revised sharply higher. If we look at our Forex Factory, we can see the non-farm employment change last month was revised up from 252,000 to 329,000, and data for January came in at 257, expected 236. So very, very positive. The dollar jumped on the back of it. And equities, they were a bit mixed really, but having done so well really up till Friday, I'm not surprised to see a more sort of balanced, neutral position. Equities coming off a little bit in the US, but certainly consolidating some of the gains on the month, on the week, I should say, at least. The US has now had 11 months in a row of job gains above 200,000, which is the first time that's happened in almost 2 decades. And for the records also, as there are a few records, the US has produced or created more than 1 million jobs in the past 3 months, which again is the most since 1997. As I said, the reaction a little bit negative, but that was certainly for equities. It was a strong number, and I suspect it was probably a mixture of rate expectations regarding the rate rise in mid-year, plus the fact that equities had had a pretty strong run up until Friday. Other news. European data had been seeing improving picture, confidence building in the Eurozone as QE will take hold in March. Weak euro is expected to improve business sentiment markedly, especially in those peripheral countries that have been calling out for a weaker euro. However, a little bit of negative news. Alan Greenspan, the previous but one chairman of the Federal Reserve, was interviewed by the BBC and pretty much predicts a Greek exit as the only logical outcome. of the current events. Time will tell, but the effects of the Greek exit alone, I don't think will be that marked. I think more serious effect of the Greek exit will be on other peripheral Eurozone countries such as Spain, Italy, and perhaps Portugal. The anti-austerity parties, I suspect, will gain more traction, possibly as a solution to the austerity-induced pain over the past 5 years. And that's something that they will be discussing at this extraordinary meeting of the Eurozone on Wednesday. This week's data and events, not so many bits of data out this week. Let's just get to the start of this week. Compared to the previous week, this is a very light calendar. The main event really doesn't happen until Thursday, when we have the quarterly inflation report published by the Bank of England, and Mark Carney, the President of the Bank of England, Governor of the Bank of England, I should say. He'll also be speaking about it, but it really is the Bank of England deflation report. I don't think there's any signs there, but it's always interesting to hear what the central bank has got to say. Retail sales in the US is an important number on its own. It's not the most important number after durable goods and non-farm payroll. It's certainly one that can impact the markets. It's the core data that we look at, which excludes the more volatile food and energy. We then finish the week with an important number that certainly is a very good leading indicator, and that comes out on Friday at 3 o'clock, which is the preliminary University of Michigan consumer sentiment number, which is a little favorite of ours and is a good leading indicator. And needless to say, with the fall in crude over the last 6 months, the consumer confidence in the United States is very, very high, and that's something that the Fed will be using, I suspect, to underpin its decision to raise rates in June, should that persist. That's it pretty much for the rest of the week. Not a lot out, as I say, but that's it for this week in terms of data and events. Thanks very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.